Welcome to SG Trading. My name is Simon Godfrey. I'm super excited to have you guys here. If you are new to this channel, kindly hit the subscribe button and turn on notification for more videos. Thank you. Today we shall be looking at candlesticks, Japanese candlesticks. That's what we have on our chart now. All these things we are seeing here are candlesticks. Okay, so Japanese candlesticks can be used for any time frame. The candlestick you are seeing here is the same thing as the one that you will see in the next time frame, which is 30 minutes. The next one, 15 minutes. So they are all candlesticks, independent of what time frame. Okay. Whether it could be 1 day, 1 hour, or 30 minutes, whatever. Okay, these candlesticks now, these ones we are seeing, they are used to describe the price action during the given time frame. In forex markets, the buyers are trying to come in and the sellers as well are trying to come in. So it's the candlestick that will determine those that are in charge at that moment, whether the buyers or the sellers. So candlesticks, Japanese candlesticks are formed using the open, the high, the low, and close of the chosen period. Okay. Now, let me look for a pictorial diagram to explain it better. Okay, let's use this. Now, we have what the bearish and the bullish. Coming here now, we have what this one particularly is the bullish candle. This one is what the bearish candle. Now, what do we discover here? The bullish candle, it opens from the downside, it opens here and closes at the top. Okay. While what the bearish open from the top and closes at the down. Now, this is called the lower shadow. This one. This thing here is called the lower shadow. You can call it shadow or wicks. WICK, can call it shadow or wicks. So this is the lower shadow or the lower wicks. Now this is the overall low. Okay. This was the upper shadow or the upper wick. Then this is the high, the overall high. Coming to the bearish candle. This was the overall high. This is the upper shadow. This is the open. And what? This is the close. This is the lower shadow. And this is what your overall low. Now this is the body of the candle. This is the body of the candle. So the body of the candle determines how healthy that particular candle is. Okay. The body of the candle determines how healthy the particular candle is. You understand? So let's go back to our chart. Let's go back to our chart. Yeah, so back to our chart. As I was explaining using that picture, this is a live chart on gold, SAUSD. SAUUSD. So this is on gold, a live chart. As I was explaining, so let's come back here. Now, look at what I was explaining using that picture. You can see the wick. Let me type it out. We have the wick, which is this one. This is the wick. This is the wick, the ones you are seeing at the top that looks so tiny. We have what? As for the bearish candle, which are the red ones are the bearish candle, the green ones are the bullish candle. Now, if you look at the red candle, which is a bearish candle, you see that what prices open at the top and closes at the bottom. You can see prices open here, closes here. While the bullish candle, price open here from the bottom, closes at the top. Okay, these are the wick. And another say was the body of the candle. The body of the candle determines how strengthened, how how volatility the market is, whether the buyers are the one in charge or the sellers are the one in charge. Okay, so now let's look at different kinds of candles, or rather different types of candles. Now we have what the this thing, the doji. We have the doji, the dragonfly doji. We have different types of candlesticks on bullish and also on bearish. Coming to the bullish, we have the dragonfly. Okay, we have the dragonfly, which is this dragonfly doji. Doji is spelled as Doji. Yeah, dragonfly doji. These are under what? We have, these are bullish candles. These are bullish candles. These are bullish candles. These are bullish candles. So under bullish candles, you have what? We have the dragonfly. We have the hammer. We have the hammer. Sorry, it's not that one. We have the hammer. Oh, we have what? The bullish engulfing. We have the bullish engulfing. Bullish engulfing. We have the tweezer bottom. We have the tweezer bottom. We have the three white soldiers. Three white soldiers. Uh, Three white soldiers. Three white soldiers. We have the morning star. We have the morning star. Okay, these are the few ones under bullish candle. Okay, so let's take it one after the other. Under bullish candles, the first one is dragonfly doji. So let's go to our chart and look for where we can find this is the one we are dealing with right now. The first one, dragonfly doji. So let's go to our chart. Let's go and look for a good doji, a dragonfly doji. And how do you know a dragonfly doji? A dragonfly doji looks like a T letter, a T letter, letter T. The opening, the highest, and the closing price, they are the same. Okay. It has no way body, but a longer lower wick. It has what? No way body, but a longer lower wick. So let's go to our charts. Let me show you a good doji, a good dragonfly doji, a good dragonfly doji. This is a doji, but it's not a kind of good one, because it's supposed to look like a T. It's not supposed to have this upper wick. So if I didn't see a good one, I can still make use of this one because it's also a doji. So let me go back. Okay, to avoid wasting much time. So let's use this one. Let's use this one. Let's use this one. So what is the psychology behind this? What's the context? You know, when the market opens, here, the BS now. So when the market opens here, the BS, they drag the price all the way down. You can see when the market opens here, the BS, which are what the sellers. We have the BS, we have the bulls. The bulls are the buyers, the BS are the sellers. Now the sellers drag the price down to this point, creating this longer wick. Okay. Creating this lower wick. Then the buyers now came in here and push it upward to this point. You can see the fight. They push it up to this point. Okay. But the more effective now, the more effective the bullish signal, it tells us that the bulls are strongly enough to compel the bears, push on, drag what the price so low. Look at it now. The price is now eventually closes at the what? The opening. That's why I said what? The opening, the highest, and the closing price are the same. Look at what happened. It opens here, the sellers first drag it down, the buyers pull it up to this point, and it closes here. Okay. Now look at the next candle that form. You can imagine the next candle. You can see the momentum of the next candle. You can see the momentum. Look at it. About how many pips? Let's measure it. Let's measure the pip. The next candle that form. Wow. About 476 pips. God is on good. 476 pips. You can see the momentum that came in. So Dragonfly Doji is a very good candle. Whenever I spot it, let's say on the higher, it work perfectly on the higher time frame. Whenever I spot it on the higher time frame, especially during news trading, should be expecting a nice pips ahead. Okay. Now, how do you trade? How do you apply this? How do you trade this Dragonfly Doji? When you spot like this chart we're using now, when you spot a Dragonfly Doji at the bottom of a downtrend, okay, no, this is a downtrend already before the spike up. It was on downtrend. You can see the candle is going down already. If you go to the smaller time frame, you see that it's a downtrend. Okay. Now, when you spot a Dragonfly Doji at the bottom of a downtrend like this, wait for the next candle to close above the high of the Dragonfly. Wait for the next candle to close above the next the high of the Dragonfly Doji. This is the high. This is the low. Okay. Let's see if we can zoom it a little bit. Let's see if we can. Yeah, perfect. Perfect. Okay. I think it's okay like this. Yes. You can see it's okay like this. Now, this is what the low, and this is the high. Okay. This is the low, this is the high. Okay. The low and the high. When you spot a Dragonfly Doji at the bottom of a downtrend, wait for the next candle to close above the high, which is this one, the high of the what? The Dragonfly Doji, to confirm the existing what? The existence of what? Bullish force, to confirm what? That the bullies are truly in charge of the market. Okay. When you spot it like this, we open a long position, not a short position. When I say long and short, I mean buying and selling. When you spot a Dragonfly Doji on a downtrend and the next candle closes above the Dragon Doji high, you should go for what? A buy. You should look for a buy opportunity. Okay? Look for a buy opportunity. Placing your stop loss below the low of the Dragonfly Doji. So your stop loss should be at the low here of this Doji, while your entry point should be at the closure of the next candle that is going to close above the next what? Above the Dragonfly Doji. Okay, that's how you can trade this. So the next one in line, the next example of candle in line is the hammer. Is the hammer, I think. Yeah, is the hammer. That is number 2. Is the hammer. So let's look for the hammer. Let's look for a hammer. Hammer looks like a square lollipop. You know, we all know what is lollipop. We all know what is lollipop. So it looks like a square lollipop. Yeah, this is hammer number 2. So let's look for a hammer. 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 Yeah, this is a hammer. This is a hammer. You can see this look like what? A square lollipop. Okay, look like a square lollipop. It looks like a square lollipop. This is a hammer. So let's check for another one again. Let's look for another one. Uh, let's look for another one. We didn't see we use that one. It's also a good hammer. Mind you, a hammer can be a word or a what, a going one. So independent of the color. Mm, okay. Maybe we should use this. Let's use it because this one has a longer wick. Has a longer wick. Okay. Use a hammer. So let's use this one here, this particular one. Now it looks like a square, like I say, it looks like what, a square lollipop with a long wick, with a long stick, or you can say wick. Now, the closing price is above or near the opening price, forming a tiny body. Okay. Now, the real body could be green, like I say, independent of the what they call it. The real body, the body here could be green or it could be red. It has no or little wick. Mind you, the lower wick should be greater than the upper wick. You can see it might, some will have wick, some may not have wick. Okay, like this one I have a wick, some doesn't have this particular upper wick here. It just stops here. Okay, now the lower wick is at least twice of the length of the wheel body. So that is to say, that's the more reason why I use this particular, because if you look at it very well, yes, I said, well, the lower wick, which is this one, should be times, at least times two longer than the body. You can see this, the body should be times two, at least times two longer than the body. That is, makes a good hammer. Okay. So what is the psychology behind it now? What is the context? Now, similarly to Dragonfly Doji, when the market opens, okay, when the market opens, the BS, okay, the BS continuously drag the price down. Okay, that is the sellers. They drag the price down during the session. They drag when the prices open here, it drags down to this point, creating this lower wick here. Okay, and eventually the buyer push it up, forming this kind of candlestick. So the longer the lower wick, the more effective the bullish signal. So the lower the longer the lower wick here, the longer the lower wick determines the strength of that particular candle. You can see, and it tells us that what the bulls, the buyers, are what strong enough to overcome the sellers. Okay. So how do we trade this? How do we trade this hamadic, this kind of candle? How do we trade it? So now look for the hammer at the bottom of a downtrend. You can see this signifies a downtrend already, because this is a strong bullish, this is a strong bearish candle. You can see about how many pips. Let's check. Very strong bearish candle. Sorry, let me measure it here. Very strong candle. So let's measure it. You can see about 105 pips. About 105 pips. You can see 100 and what? 5 pips. Only this candle. You can see. So it's a strong bearish candle. Okay. That's why I say you should be familiar with your candlestick pattern. I know some persons now, when they see this kind of candle, they'll say, okay, listen, the sellers are in charge. They'll eventually go on short. Look at what happened now. Let's say if you're not, let's say those that are not good with candlesticks, let's say they took a same deadly this one now, passes the week of this one. Now, like looking at it now, look at how the candle melts back. Look at how it made back, how it made back at this point. That's why I say you should be familiar with your candlesticks. Let's know, looking at this momentum alone, you can see that the next candle is supposed to close this at this point, then the next one is supposed to continue. But look at it. Okay. After the hammer, look, I started shooting up again. So how do we trade this? How do we trade this hammer kind of candle? Like I say, the first one, it must be, you must spot it at the bottom of the downtrend. Now wait for the next candle. Wait for the next candle, okay, to close above the high of the hammer to confirm truly that the buyers are in charge. Okay. Like in this case now, you can see the next candle that closes. You can see this one didn't close above the next high, above the high of the what? Of the bullish of the hammer. So now, since this one doesn't close above the hammer, you wait for the next candle. You can be patient. That's why they say patient pays the bills in forex. So you have to be patient. Now, looking at it, this one now closes above the two highs. So it's good enough for you to enter your position from here, placing your stop loss below this high of this candle. Okay. Now let's say you open a position from here. Your stop loss is here. Let's check how many pips in profit. Let's say you open from here at the closure of this candle. You open from here. Now look at about what? About 80 something pips. So it's a good trade already. It's a good trade. It's a good trade. So the next candle is what? The next candle is bullish engulfing. Is a bullish engulfing, bullish engulfing, bullish engulfing. So let's look for a bullish engulfing candle here. Let's look for a bullish engulfing candle, bullish engulfing candle. Now, I think we can make use of this bullish engulfing. It must be on the words, like I say, all this, any all these candles you are listing is under bullish candle. So it must appear at what? At bottom of a downtrend. Now, a shorter wet candle followed by a longer green candle. A shorter wet candle followed by a longer green candle. A shorter, let's look for it here. I think sure. I think let's this is a good example of bullish engulfing. This is a perfect one. You can see a shorter wet candle and a longer green candle. Okay. So what's the contents behind this? What's the psychology? Now the word candle implies the control of the sellers. This one here. It shows the control of the sellers in the market. Now the market opens below the low. It opens here. The market opens here. Okay. It opens here. So just see what continuation of the words. Because if you look at it from, let's check, you can see it's a downtrend. You can see it's a downtrend. You can see it's a downtrend already. You can see it's a downtrend. Let's use our trend line. Sorry, this was our trend line. Let's use our trend line. Use our trend line. You can see the market is a downtrend to this point. Can you see that? It's a downtrend to this point. Okay. It's a downtrend to this point. It's a downtrend to this point. It's a downtrend to this point. Now, what do you notice here? The moment this bullish engulfing form, look at what it started shooting up. You can see it started spiking up. You can see started going up. Okay. So now, like I say, it must be on the what bottom of a of what of a downtrend. Now, the buyers, sorry, the bears, which are the sellers, they lose momentum. They both take charge because this candle now is bigger than this one. That is what a bullish engulfing. It means what the buyers take charge immediately. That's mean changing the pattern of the market, the trend of the market. So they immediately changed the trend from what? From a downtrend to what? To an uptrend. Okay. This is a good example of a bullish engulfing. Okay. That's to say that what the bulls or the buyers now have full control of the market. So how do we trade this particular candle now? Bullish engulfing. Okay, like I say, it happens most at times, mostly on the downtrend. So when you spot a bullish engulfing on a downtrend, wait for the next candle. Okay, wait for the next candle to close above the high of the green candle to confirm that actually this is a bullish engulfing. Okay. Okay, look at the next candle that closes. You can see this candle now closes above the next green candle of the bullish engulfing. You can see. So if you're entering this trade now, you should enter at the closure of this candle here, placing your stop loss at below what the candle that closes above the bullish engulfing. Okay, you place your stop loss here, put your position here. You can see an option that's happening there. You can see it started shooting up. You can see. So the moment the bullish engulfing appears, the market condition changes immediately to a what uptrend. You can see. So open a long position, open a buy position when you spot this kind of opportunity, placing your stop loss below the low of the green candle, which is this one. Okay. So what's the next candle? The next candle is a tweezer bottom. Tweezer bottom. So let's look for a tweezer bottom here. How do you know a tweezer bottom? There must be, like I say, all these candles, they must appear in a downtrend because we are dealing with what bullish candles. Okay, all these candles are measuring are under bullish candle. So now a red candle followed by a green candle. Both candles have the same low. Both candles have the same low. So let's see if we can see a good example of a tweezer bottom. Let's see if we can see a good example of a tweezer bottom. I think these the boat must have okay. The low of the boat must be the same. This looks like one, but it's not a perfect one. So let's go. Let me look for it. The two, very good. I think we can use this one. The lows are not the same. The same low, the same low, the same low, the same low. If we didn't say it, we can continue. Let's look for it. Yeah. Do we have the same look here? I think yeah, this is perfect. This is perfect. This is perfect. Yeah. So this is a tweezer bottom. This one here, you can see they have the same low, the same low, the same low. Both candle must have the same low. It must have the same low. Okay, that is a red candle followed by a green candle, and they must have what the same low. So what is psychology behind this candle now? Or what is the contents behind this candle? The candles in both sections from the same low, suggesting that the market refuses to go below. Okay, you can see as they're having the same low, it means what the market refuses to go below. Okay, that's why they're having the same low. So once the price touches the floor, this is not the floor. Once it touches the floor, it bounces back. Okay, that price level may be viewed as what a short-term support. You could review this as a short because once this one first of all created this low, this one now came to this low and started sparking up again, started melting back. Okay, started melting up. So once the price reaches this floor, it bounces back. Now the closing price of the green candle what shies away from the low further than the red candle does. It shows that what the bullish forces are getting stronger. So the formation of this candle now shows us what the bullish candles are getting stronger. So how do we trade this kind of candle now? How do we trade it? How do we trade this kind of candle? Now look for the tweezer button at the downtrend. You can see, you can go with me that this is a downtrend. If you look, it will look more clearer if you go on the lower time frame. This is a higher time frame. You can see it's a downtrend. Okay, it's a downtrend. Now, uh, so now look at it here. A downtrend already. Okay, you can see the tweezer bottom. Now, how do you trade it now? When you spot this as the downtrend, when you spot this kind of candle as the downtrend, make sure that the lows are the same. The lows are the same. That is number one rule. The lows must be the same. Okay. Now, when you spot this kind of candle, the downtrend, wait for the next candle, like I always say, for confirmation. Because eventually when you jump in, because this is a double, this they have the same high, it's okay, this is a chooser button. You couldn't wait for the next candle, you don't have the patience, because most of us doesn't have patience in trading. Okay, you jump in. What if the next candle didn't continue the uptrend, started shooting down? That's why you should always wait for confirmation. The confirmation here that you should wait for the next candle to close above the high of that tweezer bottom. Okay, wait for the next candle to close above the high of the two candles that form the what? The tweezer bottom. Open a open a long position, open your buy position upon this confirmation, then place your stop loss below here. Okay, you can see the move now. Look at, you can see the massive move. Look at now from this point. Look at it from this point now. You can see very massive, very massive. Okay, this is all about tweezer bottom. So let's look for the next one. I think that is the last one, or the okay. We still have three white soldiers and Morningstar. So now let's look at three white soldiers. Three white soldiers. Let's look at three white soldiers. Uh, so they are just three white soldiers. They are just three long green candles following themselves. Three long green candles following themselves. Let's look for. Let's see if we can get it. Um, let's see. Let's see. Let's see. Let's see. Let's see. If we can still just make use of this one. You can say 1, 2, 3, or 1, 2, 3. There are okay. Let's make use of this one. Three white soldiers. Or we can make use of this because okay, this one is not good. You cannot make use of this one because this one is supposed to close above the previous high. So this one is more perfect. You can see this tree is more perfect. This is a true white soldiers. This one closes here, the next one closes here. So let's use this one. Let's use this one. Let's use this one here. Now, what is psychology? What's the contents behind this candle? Now, true white soldiers. The first long, the first long what? The first long weight candle cause signals that the BS are getting weak. That the sellers are getting weak after the prolonged downtrend, and the bull starts to take over. The bulls continue the rally with the subsequent two candles closing higher. You can see like that's why I say we cannot use this in here. This one here as well, true white soldiers, but we can at least use this one. But if we can see a perfect one, we go with it. To avoid wasting time, let's use this. This somehow close to a true white soldiers. You can see the candle must close. Each candle that is forming next should close above the previous high. Can say this one now is first from this, the next one closes above 5, the next one should close above 5. So that's a true white soldiers. Okay. Now the first long green candle So how do you trade this? How do you trade this? Look for the three white soldiers at the bottom of a downtrend. Wait for the fourth candle to close above the high of the third candle. This is what? 1, 2, 3. So now the fourth candle should close above the high of what? The third candle, which is this. You can see this one closes above the high of the third candle, giving you further confirmation that you should enter for what? A buy. Okay. You can see I did me enter from here, placing your stop loss below here. From here to here can give you a good profit. Sorry, from here like this to this point can give you a what? A good profit. Okay, can give you a good profit. 1, 2. The condition states what? The condition says that the fourth candle must closes above the third candle of the three white soldiers. Okay, 1, 2, 3. The next candle should close above the third candle. Okay, then you enter. Then place your stop loss below the first candle, which is this one, the fourth candle, which is this. So the last one, which is the morning star. Okay, that one is rare. It's rare, but we can still find it. Let's see if we can find it. I don't want to use pictures so that we can work with raw. When you are dealing with raw charts, it will more you understand it more than when using just pictures. So that's why I'm using this live chat. Okay. I could have used a picture to explain all this, but it's more good than as you are using live chat so that when you are seeing it yourself, you will be spotting it out that this is actually what I'm explaining.